Hi, my name is Gbolahan Olungunro from ARMIM Investment Managers, and I'll be taking you through macroeconomic and financial market events for October 2022. The Central Bank Governor, Godwin Emefiele, revealed plans by the Apex Bank to issue new series of banknotes for the 200 naira, 500 naira and 1000 naira denominations. The Central Bank Governor noted that the aim of the policy is to improve the currency management and, by extension, have greater control over demand-side induced inflationary and foreign exchange pressures. According to data published by National Bureau of Statistics, headline inflation grew at a slower pace in September relative to August, as it rose by 25 basis points to 20.77% relative to 20.52% recorded in the month of August. This was on the back of sustained pressures across the food and the core baskets. Food inflation grew slower by 22 basis points relative to the 110 basis points expansion recorded in August. However, the drivers of food inflation remained centered on security challenges in food-producing regions, elevated input, and associated logistic costs. Similarly, core inflation grew slower by 40 basis points relative to the 94 basis point expansion recorded in the month of August. This increase was, however, due to the continued impact of elevated energy prices and liquidity challenges in the foreign exchange market. The equities market suffered its biggest monthly loss in 2022 and the fifth consecutive month of losses, as the all-share index declined by 10.58% on a month-on-month basis. The year-to-date returns also moderated to 2.63% relative to 14.77% at the end of September. The bearish performance of the market was largely driven by losses in large cap stocks such as Airtel Africa, Dangote Cement, and Nigerian breweries. Sectoral performance was broadly negative as the insurance index recorded the biggest loss, followed by the oil and gas, consumer goods, and banking indices. Industrial goods index, however, emerged as the lone gainer on the back of gains recorded in Boa Cement. Nigeria's fixed income markets continue to experience expansion in yields due to low level of liquidity in the financial system and expectations of increased supply of government securities by the Debt Management Office. At the last NTB primary market auction in October 2022, the stop rates for the 91-day, 182-day and 364-day bills settled higher at 6.5%, 8.05% and 14.5% respectively. The secondary NTB market also continued to witness sell pressures throughout the month as market players exited their positions to cover liquidity shortfall. The FGM bond market remained bearish in October 2022 as average secondary bond yields rose by 108 basis points due to selling activities across the curve. At the primary market auction held during the month, stop rates increased significantly across the 7-year, 10-year and 15-year instruments offered by DMO. However, the April 2037 maturity recorded the largest increase as stop rates settled at 16%. With interest rate expectations still biased to the upside, we expect market sentiments to remain weak as investors continue to rejig their portfolios towards the fixed income markets to take advantage of attractive returns. In addition, we think the compression in margins evident in Q3 2022 corporate earnings, particularly for consumer good companies, would likely exacerbate negative sentiment. Barring any positive surprises from heavyweight large cap stocks such as Dangote Cement, Airtel Africa and Boa Cement, we see scope for the local bourse to close in the red territory in the month of November. In November, the fixed income market is expected to remain bearish on the back of stubbornly high inflation rates, tight liquidity in the financial system, and expectations of increased supply of domestic debt instruments. Barring any significant maturities in the month, liquidity is expected to remain tight, with demand and supply dynamics largely determining the extent of yields widening in the fixed income market. The Monetary Policy Committee of the Central Bank is expected to maintain its hawkish stance for the rest of the year, given the need to contain elevated inflationary pressures, reduce negative real returns on investment securities, and mitigate capital flight from the domestic economy. Now, a quick recap of what we have covered so far. the Central Bank Governor Godwin Emefiele revealed plans by the Apex Bank to issue new series of banknotes for the 200 naira, 500 naira and 1000 naira denominations. Headline inflation maintained an uptrend in September, albeit at a slower pace relative to the expansion recorded in the month of August. The equities market suffered its biggest monthly loss in 2022 and the fifth consecutive month of losses in September. Fixed income yields expanded due to low level of liquidity in the financial system and expectations of increased supply of government securities by the Debt Management Office. I hope you found this insightful. Should you have further questions or inquiries, please do not hesitate to contact your relationship managers or our customer care representatives. Remember, we remain invested in your tomorrow.